This is Ndtv. And you're watching Ndtv Hindu.
Hello and welcome to Business Line. I'm Pranav Bakshi. Join me over the next half hour for a quick recap of the week's business developments. Our top story this week: even though the economic activity is picking up, the Prime Minister's Advisory Council has chosen to be cautious. They're keeping the growth numbers for next year at a conservative 6.5%. Here's the report.
Optimism is rising and investors are once again cheering the India growth story. But the government's economic think tank is trying hard to manage expectations and says that growth is unlikely to move back to 7% despite the strong revival in industry. The Prime Minister's Economic Advisory Council has forecast growth to be around 6.5% for 2009-10. In terms of sectors, agricultural growth will turn negative and output will reduce by 2%. This will offset the strength in industrial growth, which is expected to grow by over 8%. A massive jump from last year's figure. The services sector will also grow by 8.2%, but growth will be slower than last year. But those worried about growth leading to a resultant tightening of monetary policy can breathe easy for now.
I think the stance of monetary policy will remain the same so long as inflationary pressures remain under control.
The Economic Advisory Council projects that the rate of inflation will not cross 6% by the end of this fiscal year, and that growth could touch 8% in the next financial year. But to achieve that kind of growth rate, the government will probably have to maintain its fiscal stimulus. The decision to continue with fiscal stimuli may be a tough one given the government's weak finances. But policymakers feel the stimulus may be needed for some more time since the onus of driving growth remains on domestic demand.
It will be a natural process. Some fiscal stimulus will be continued. But there will also be a process of fiscal consolidation in 2010-11.
External growth up to the coming March is not very much. So we have not factored in a great deal of external growth factor. We think that the situation will continue in the year.
While the growth trajectory is steady, the government is yet to tame food price inflation, and the shortfall in agricultural growth could fuel that further. In New Delhi, with Sapna Das, Haris Usman, Ndtv Profit.
The International Finance Corporation, part of the World Bank, is the largest multilateral investor in private health sector in emerging markets. The IFC is now planning to invest in a major way in India's healthcare.
India's emerging healthcare sector has found a new mentor in the International Finance Corporation. The IFC is set to raise its investment in healthcare companies to more than $2 billion in the current fiscal from the $1.5 billion invested last financial year. IFC's largest country exposure is in India with a 3.4 billion commitment in FY09. India also accounts for 3/4 of IFC's exposure in South Asian healthcare.
India has actually received roughly 15 to 18%. The $1 billion is a round number. But India will remain a very significant place in which we invest.
IFC holds 1.3% in Apollo Hospitals. It has invested $100 million in Max Hospitals, and it's invested another $22 million in Rockland Hospitals. IFC has bet its money on the development perspective of creating healthcare services where there is none. But given that hospitals generally have a negative cash flow for 3 to 5 years from start, how does IFC structure its loan in line with the project's cash flow requirements and ensure returns?
We don't have a set window like a venture capital or private equity firm that usually has a pretty strict 3 to 5 year time horizon. We're able to look as you say, 5, 10 years. We are not looking necessarily for the highest return out of a number of possible projects.
Visibility of positive cash flow, self-servicing debt and a development objective from the project is all that IFC is looking for while investing in the healthcare segment. And with India's share of the overall committed portfolio rising from 8.8% to 9.8% in this fiscal, the healthcare space in India is set for a big boost. In New Delhi, Bianca Ghosh, Ndtv Profit.
Let's take a quick look at the market updates now.
Election results favouring the ruling government failed to buoy markets towards the weekend as the Nifty closed just short of the 5,000 mark and the Sensex closed the week almost 3% down at 16,810 points. Inflation surged to a 20-week high with the annual wholesale price index-based inflation rising 1.21% during the week ended October 10th. Food prices drove the index higher. September quarter results continued to flow in. Among the companies that have so far reported their numbers, automobile and cement companies have fared well, while metal companies have seen a dip in profits. Overall, profit growth appears to be strong, though companies are finding sales growth hard to come by. The CBI launched a probe into corruption charges against some Department of Telecom officials for allegedly showing favour in awarding mobile licenses to certain new players in 2008. Infosys mentor Narayana Murthy sold almost a fourth of his stake in the company to raise money to set up a venture capital fund. Cable distribution company Den Networks is set to open its IPO on October 28th in a price band of Rs 195 to 205. Market trading hours may be extended from 9 to 5 daily, with the regulator approving the extension and communicating it to stock exchanges on Friday.
A financial expert joins us on the other side of the break, giving us tips and pointers on how to invest. Stay tuned.